So we're going to look at Alibaba Group as far as a stock to analyze quickly using some fundamental and technical analysis for educational purposes only, and to give my class a little bit more understanding of how different ways to look at a stock. So it's always good to go to the stock's webpage and get an idea of their mission and their vision, what the company is about, and they have a couple links here about their business, their culture that you may want to read over, and explains quite a bit about what they do and their subsidiaries and such. And the investor relations, where they have an investor relation homepage that has recent news and information, stock price, and things of that nature, and other news and resources. So this is a good area to kind of get more understanding of what the company does. Now, this company is sort of a Chinese online realtor, which is a combination of sort of Amazon, think Amazon and eBay put together. And the sales have been growing steadily and profits, so it's a very dynamic Chinese company. And it's recently become an IPO to trade on American exchanges. And I believe it trades on the NASDAQ exchange, given the fact that the symbol is BA, which is usually a 4-character symbol to know it's a NASDAQ marketplace. Okay, so let's look at a chart for a little technical analysis first. And we see that I put up here the blue line is the stock price, green line 10-day moving average, red line 20-day moving average. Generally, we like to use a 50 and 100, but since this has only been trading for a few months, we have to use a shorter time frame. So over here, the stock started off strong on its IPO and has drifted about. This is the interesting telling point. When the stock actually penetrates above the 10-day moving average and then is able to also be above the 20-day moving average, right here is two strong technical buy points, breaking through the resistance at the 10 and 20-day levels, and then the 10-day crosses over the 20-day right here, which is another strong technical. So we have three strong technical buy signs, and we see the stock price elevating ever since those three strong technical buy positions. Now, is it a good buy today? According to the Relative Strength Index, the RSI, which is a relative strength index, which looks at the how oversold or overpurchased the stock is. Now, down here, it would say that, and this is since would be overly sold down here, which is kind of not uncommon when IPO comes out. And then during its run-up here, on November 10th, we could see that that's sort of the peak of its run-up, and it reached a level above 80 on the RSI. So anytime a stock trades above 80, it's considered very much over-purchased, and all this RSI usually, when you get to an extreme like over 80, it wants to gravitate back down towards 50, even 40. Now, it has been gravitating, it's gone down to 68, and that's sort of, since there's been so much over purchasing, the sales of the stock are starting to catch up as people are profit taking. Now, so I would say technically you may want to wait for this to reach more of a 50 level, which would be a neutral, before you bought any shares of this to go into a virtual stock market. Okay, so that's all very interesting. Let's look at the PE of the stock is currently at 56, which is very high for a retailer, but this is an online retailer and not so much different than, say, an Amazon. And the low is 82, the high is 120. Earnings per share are $2. Okay, so, and the market cap is 285 billion, so a very large company. And we have the one-year target, Yahoo target of 119, based on estimated growth in sales and earnings. So it's already surpassed, at one point it surpassed that 119, and today it ended at 114, so it's back down below its target. So let's look at some key statistics. This also here is a good profile, is a good area just to get some ideas about what the company does and where they make their money. The key statistics, let's just get a better idea of the layout of the company. So the PEG ratio is 164. Now, a PEG ratio 1 is neutral, but under 1 is undervalued, and over 1 is overvalued. So being at 1.64, I wouldn't say that's a negative indicator, given that this is a very hot IPO It's an online, has an online growth performance. So I'd say the PEG ratio is fairly, shows that the company is overvalued, but I would say in this case it's fairly valued given its high demand position and its high PE. Now, if we look at the profit margins are also very impressive, around 46% profit margin and 42% operating margin, which is incredible. And they have $10 billion in revenue, about $4 per share, 53% revenue growth, which is very strong. Although they have an earnings, a year-over-year change of almost negative 40% earnings. So that is a little, that would worry me some. But not typically uncommon for online realtors to have low earnings after, you know, they have an incredible amount of expenses to run a company like this. $18 billion in cash, $10 billion in debt. So financially, we would say that they're pretty solid financially due to their cash holdings and their debt position. Debt to equity is 49%. Earning book value per share is $8. So give you a position, you know, company's trading at $114 and the book value is only $8 per share, which isn't considerably unusual for an internet level stock. And cash flow is at an impressive $5 billion. So the one thing investors should realize about the stock is that the amount of shares outstanding is 2.5 billion, which is a huge amount of shares. So this, when they went IPO, they raised a terrific amount of money for this company. And the float's about 1 billion. That's shares free and able to trade right now. The short sales are 27 million. So the short position is very low, less than 1%. That means people have a lot of faith in this company moving forward. Okay. And let's look. They don't have any, right now there's no financial statements posted quarterly because it's so new. All right, so these are just some analyst estimates. They're pretty much all in line with each other. Expected growth at 36% next year and 30% in the next 5 years, which is above industry levels, averages. So it seems overall that, you know, this stock may be a little pumped up right now, but the technicals say as long as the relative strength pulls back a little bit back down to 50, the technicals look good for an entry point in your virtual stock market for a purchase on this stock. But this I would say, this stock, some things to worry about on this stock. One thing would be if you look at, let's see, I don't know if they were able to calculate beta now because it's too new of a stock. I would say the stock has a relatively high beta, and that if there is any type of market pullback or market risk, this stock could be affected more than most stocks. Although back in October we did have a downturn in the market for a brief period, and it doesn't really look like Alibaba was affected too greatly by that downturn. So there may be a little protection against if there is some market turmoil. So maybe the beta is a little bit lower on this company. However, it is a stock that so far has performed well this year, and a lot of people may be chasing the stock, which could artificially pump it up. So I'd say long term, as long as this company can deliver on its growth estimates and its prospects for the future, it probably will have a performance similar to a Google when that was first came out as an IPO, and then, or even Amazon, maybe actually closer, where they could have some initial volatility, but then as the company reaches a more solid footing, has a longer growth trajectory. You know, perfect for one of those growth-oriented mutual funds. Okay, so that's it for the quick analysis of Alibaba. And this again is a video presentation for educational purposes, so I don't suggest anybody buy or sell the stock with their own real money. Thank you.